Hey guys, Jack Gleason here with MajorLeagueTrading.com coming at you with your week breakdown. This is going to be the first week of August. So summer's coming to an end, and as we move into the fall season, volatility should pick up. But let's first get taking a look at some of the news events we have for this week, starting with Monday. Coming out of the Great Britain pound, we are going to have some news events at 4:30 a.m. Eastern Standard Time. Then for the euro, we have news events out of the euro: CPI, core CPI, and unemployment rate. Those are really the bigger events on Monday. Tuesday, for the Australian dollar at 12:30 a.m., we're going to have the RBA rate statement and the cash rate. And then at 4:30 a.m., you're going to have manufacturing PMI for the Great Britain pound. 10 a.m. ISM manufacturing for the US dollar. And on Wednesday, Great Britain pound construction PMI. And then we have non-farm employment change in crude oil inventories on Wednesday. Non-farm employment change is going to be 8:15 a.m., 10:30 a.m. crude oil inventories. At 9:30 p.m. on Wednesday, trade balance for the Australian dollar. And then on Thursday, we have a stacked news event. We have Spanish services PMI, Italian services PMI, French services PMI, German final services PMI, all coming out of the euro. That's going to be from 3:15 a.m. going out all into 4 a.m. So the euro should see some volatility during that time frame. Moving into the morning session at 7 a.m., you're going to have Bank of England inflation report, and then a monetary policy summary with the official bank rate out of the Great Britain pound. So opportunity and volatility will be in the Great Britain pound at 7 a.m., 7:30 a.m. on Thursday. 9:30 p.m., RBA monetary policy statement and retail sales for the Australian dollar. And then on Friday, coming out of the Canadian dollar at 8:30 a.m., you're going to have the employment change, trade balance, unemployment rate, and then for the US dollar, you're going to have non-farm employment change and the unemployment rate at 8:30 a.m. But that'll do it for news. Let's take a look at some of the markets. I'm going to start off with some of the ones I focus on. One of those markets is CL, or the oil markets, for Nadex. What I'm looking for this week is a pullback into 48.67. So I'm going to go ahead and actually create an alert at this 48.67 level. 48.67 is going to be a retest of this area we had broken out of the previous highs from Wednesday and Thursday that had began our rally on Thursday and continued on Friday coming out of the rig count. If we can retest 48.67 to 48.20, this is a support zone I will be watching in CL. Let's take a look at this daily chart. What we have here is a very nice bounce off the lows of 42.20. We've made higher highs, higher lows, and we've been on a really nice run. 1, 2, 3, 4, 5 days of continuous higher highs and higher lows in CL. So the market has been strong, but what I really want to see is a pullback. So 48.67 is where I'm going to be looking for opportunities for potential long trades this week, and I've set an alert and we'll review it if it can trade back lower. Moving on to gold, I'm looking at the GCZ7 contract, which is a current contract for December in gold. That's the one Nadex is currently trading. This market on the daily chart looking really clean. If we start trading back above this high here at like 1283 area to 1290, I do think that gold can potentially break out into new highs on the year. So this is a market I'm paying attention to, and I really like ever since it has pulled back off the 50% retracement from the lows of 2016 to the highs of 2017. That 50% retracement first was front run going back in May, retested and had some accumulation at the beginning of July, and ever since we've come out of this first high here that we put in on July 12th, there's been a lot of upside momentum in this market, and what I'm looking for is opportunities from the long side in GC continuing to trade on the direction of the side of the trend. I want to mark 1272.6 as a first potential opportunity, and then below that 1271.3. So that is going to be my ideal trade location for potential opportunities in the gold markets going into this week. Then moving on to the USD JPY. Now the USD JPY has had a nice range that it's been in, pretty much started going back to April, and we had it April lows, went up to May highs, retested the April low in June, and then retested the May high here in July. So we've been going back and forth between 108.82 and about the 114 level. This 109.55 is going to be where support was found going back to June 14th and June 15th. You can see that is where the day had closed, reopened, and we had begun our rally. So what I'm paying attention to is a potential second test of that level that could come into play this week, and that is what I will be looking at. And then as far as resistance, these previous lows we had broken down from, which is near the 111.14 level, I'm going to set that alert. So I do think that we'll find a hard time getting back above these lows we had broken down, and I think we continue down in the 109.55. So I've marked up that 109.55 in the USD JPY, anticipating potential support levels, and at 111.14 looking for potential shorting opportunities in the USD JPY. Moving on to the S&P 500 ES market. So we had a big sell-off here on Thursday, guys. Look at these. This is a 2-hour chart, and you have two massive candles down. The prior day, the initial balance, which is the first hour after the NYSE open, only had a 3.25 point range. Then as we opened on Thursday, the market looked slow again, and then coming into 9 o'clock, 10 o'clock, we really started rolling over, and we had dropped really over 25 points off the high. So that's been an incredible pullback. This first retracement candle here, this big green one, that high is a 24.73. If we get above 24.73, I think shorts are going to be trapped below these levels. And above 24.73, I'm anticipating a continuation into another new all-time high. But if we do continue to fail from these levels and we cannot move higher, I fully expect us this week to trade down to 24.52 half. So 24.52 half is my downside support level in the S&P today or this week, and that goes back to Tuesday, July 18th, where the rally had begun to take us into the most recent range. So that is where I'm coming up with these support levels. The support levels from this trade location area on Tuesday, where the rally had begun, and the resistance at 24.73 is just a high of this candle. It's also the previous lows of Wednesday before we had broken down. So I'm really expecting the market to trade inside of a range between those two levels this week. But that's going to conclude my trade plan for this week and some of the setups I am looking at. If you guys would like more information, you can feel free to check us out on YouTube, Major League Trading, or make sure to like and subscribe to the Nadex channel. I'm going to be putting out another video on Wednesday, and we'll follow up with these technical setups. Everybody, trade safe and enjoy your week.